Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, February the 7th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I am here to teach you some different strategies that you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with the economic data. We got across the pond, German industrial production. Now, keep in mind, it's not one of their most widely looked at numbers. It's not the major headline number, but it is something good to keep an eye on. That industrial production out of Germany came in at negative 0.4%, expected to be a positive 0.8%. They also revised last month's number to a negative 1.3%. So that was an upward revision, actually, to a negative 1.3%. So that's good. It doesn't make up for the difference we saw this month, though. And then back here in the United States, all we really got here in the United States was the unemployment claims coming in at 234,000, expected to be 220,000, higher than expected there. More people claiming unemployment, not necessarily good for the economy, but we're seeing the economy basically come back into full employment. So it's going to be hard for those people, those discouraged workers that fell off the unemployment list, coming in late to the game where people have already gotten hired. That could become a problem for them, right? Because they were late to come back onto the unemployment list. Discouraged worker basically means they've tried for unemployment, they didn't get employed, they've fallen off the unemployment list because they haven't been keeping up with it, and then when they see the economy start churning again, then they go back out, start looking for a job, go back on the unemployment list, and are counted. So that's where we're seeing those numbers get skewed a little bit. And then we also got natural gas storages coming in a drawdown of 237 billion cubic feet, expected to be a drawdown of 228 billion cubic feet. Not a major enough difference to really move that needle. I don't think it's pretty close to in line with expectations there. Again, still Chinese bank holiday all week. But crude oil starting to roll over again. As you can see, we've got that bit of a topping. We are right back down to where we're building this volume node. I could easily see us building a nice large volume node in and around this 5250 area, which is kind of where I see the economy and the oil kind of coming together as a nice meld, where you don't really want really high prices when we aren't having an economy that's moving, right? And we don't really want super low prices because we want the businesses to be able to break even, at least here in the United States, to be able to keep that fracking operation going. If they can keep that fracking operation going, they streamline that process, and ultimately we will be able to see lower oil prices, hopefully, in the long run, because it's cost prohibitive to frack. All right, but so we at least wanted this kind of stay up in the 50s for the most part. All right, gold futures, they're getting a little bit of buoyancy today. Yesterday, breaking down back into the value area, it broke through the value area high, which means it's back into the area where most time and volume, 70% of the time and volume has been spent. We're testing that to the upside right now as we were seeing some weakness in the overall equities this morning. That was given a little bit of push there, and with the bonds, as you can see, they're up on the day. Let's flip over to the VIX, getting a nice push to the VIX today. I was thinking we were going to lose even the teens pretty soon if we start doing what my market assumption was, is get back to the point of control and start settling down. You can see yesterday, I talked about this. It was starting to look very toppy. Today, confirmation to the downside, right back to the point of control like I was talking about. So all of those levers and pulleys working nicely for me today, as well as the E-mini S&Ps, levers and pulleys. Talked about it yesterday again. Very, very toppy. Felt like it was slowing down on the momentum to the upside, and I felt that it was going to retrace back down to the point of control, which is kind of what we're doing across the board. E-mini S&Ps, you can look at it on a daily chart. 30-minute bar chart. Each blue section is a day. You can see this is actually really starting to pick up some momentum to the downside in the equities. One thing to note, with the lack of China participating, those lighter than normal volumes, it can either make it very low volatility or very high. You usually don't get that in between. And I think that we're seeing in the past few days headed up to this, we weren't seeing a whole lot of volume, not a whole lot of volatility. But today, with lack of support or anything else going on in the markets, lighter volume, we're seeing exacerbated moves. And I think that that's what we're seeing here. I don't know that that's necessarily off the economic data or anything else along those lines. I think it's pretty much a technical move based on what we were talking about. It just got a little bit overdone to the upside, was losing momentum today. We're starting to see those people pile in to cover those longs. All right, and then we got a couple of trades that I've done. CMG, I went in here and I sold the February that expires tomorrow, and I sold those February 470 puts in there for $2.15 yesterday. I bought them back this morning for a nickel, and that was actually right off the open. I saw the market really rallying and pulled those. Remember, I try to get out of these trades right off the bat so that I get out where the market has priced in. Sometimes, like yesterday, Disney, we saw a big reverse around in Disney that I can show you. And had I not gotten out early on in the day, it would have been a very ugly or painful kind of ride. We can see on the open, we traded up on the day. That's where I got out. I was short puts. And then the rest of the day, it really started falling out of bed and continued today. That's why I talk about staying mechanical. Get out of these earnings trades immediately on the open, or become mechanical if it's not a winner. Now, talking about that, let's go back to EA Sports. You remember EA Sports, I was short the 84 puts in there, and then I can't remember what the calls were. They were like the 101 calls, let's say. I rolled those calls, the short calls that were worthless, down to the 82 put. So I inverted my strangle in a sense. Got very aggressive with that. You can see today, because I was trying to get enough credit to lock in that spread between 84 and 82, because I felt like it was going to come up in and around this area right here where it found a bit of support overnight session. I felt that that's kind of where it might want to migrate to. Now, had I not rolled down those calls and became mechanical, yes, some of you guys could be looking at me today and saying, well, you would have been having you would have had a nice profit today had you not been aggressive like that or mechanical. But the thing is you never know when it's going to work out mechanical or not, because hindsight's 20/20. To me, I'm very happy about my assumption and being mechanical, rolling that down, collecting more credit, locking in a zone of $2 where I'm at break even, right? That is very good trading mechanics, is in to a T, if you will, to lock in at least a nice range where you don't lose money, and that's what I've done there. So I'm going to have to hold on to it till probably at least tomorrow, and hopefully we'll stick right in and around this area so I can get out of it for at least a scratch. That's what I'm looking for. Right now, it's about a 75-cent loser, I'm thinking, total. So I've increased my break even to the upside almost where the market has traded to the upside there. So remember, because I've collected a total of $2.14, I'm protected to basically 84.15, and on the downside, what is that, 81.85. So I have a nice big range for my break even to land in, which is ultimately what we want to do when we're trying to be mechanical, right? So that's what I've done there, and waiting for that one to kind of play out still. So just keeping you guys up to date on that. That's all I've got for you guys. Other than later on today, we're going to be doing it on the short put spread. I'm going to talk about the rules in and around how to set this strategy up in order to increase your probabilities of success. All right. That's getting in and getting out, how to stay mechanical with this trade. I'll show you how to do all that today at 4:15 Eastern. So check it out. If you can't take that, take it easy.